Hello, trading is closed on September 15th, 2015. I'm Jeff Tennant. My call last evening said unless we had a gap under these lows, which we didn't, that we should have a pretty strong rally, which we did. We had this failed MeJT target from the 9th of the month, which printed, and there was some resistance when we hit it, but resistance doesn't have to hold. We still have a failed MeJT target of 1946.93, which should print. During the day, MeJT early on said ultimately higher price it would print, which they did. It says the move is false and gives us a target of 1969.85, and that's my call for tomorrow. This is a pattern which typically closes at the day's high. It's a strong pattern if you have a gap up and rally all day long, but it's not strong when you can't close over the middle of the day high. Unless we promptly take out the high of the day today, ideally by having a gap over it, lower prices should print, and I'm reasonably confident this 1969.85 price will print. I have to qualify that confidence by saying there's a FOMC meeting tomorrow, and when those guys meet, it can lead to some wild, unpredictable moves, which I find impossible to trade. It doesn't cost me any money to make a prediction, though. Well, there's some more negative things from today's action. We had a stilt up and the handle sloping up. That doesn't mean the handle has to stop right here, but in general it isn't a sustainable pattern. A lot of times this turns into a diamond on stilts. Doesn't have to. Here's a 65-minute chart, and this has some ominous implications for the bulls. Here's the last TDS-T line, higher. We have been railing and cannot break through that line. We now have 11 bars of countdown of a sequential sell. We need 13. There is a possibility that we move down right from the open and then rally so that by the middle of the day we get bar 13. If we get bar 13 without going over that line, usually that's a sign of weakness. If that happens, the earlier in the pattern the high of the pattern occurs, usually the more severe the drop, and the high of this pattern is right here at bar 7 of setup. That's about as early as you get, because if bar, that's the earliest that you possibly can get, because if bar 6 is the high, the whole pattern does not work. So if we drop and then rally by the middle of the afternoon, we have the potential for an extremely ominous drop. The bad news does not stop at that point. Everyone's been seeing this obvious triangle, except I'm not so certain it's a triangle. Triangles that go all the way to the apex don't mean very much anyway. It's supposed to break out about 2/3 of the way across, but this big hole here kind of concerns me. I looked at the internal pattern. I don't think it's easy to count it as a triangle. I don't know much about Elliott wave, but I think it counts more efficiently as an ABC. Here's A, B, C, D, 5 waves up for A. Here's your A, B, C for wave B. Then you got a bunch of 3s here, A, B, C, and that would be the end of wave 4. And if that works, don't do that to me. If that works, it's kind of interesting that wave A and wave B have a nice Fibonacci relationship with, not wave B, wave C has a nice Fibonacci relationship because wave C is exactly 61.8% of wave A, which is compatible with the rally ending at today's high, which I think is quite plausible. This is the 89-week moving average. Typically, if I'm correct about us switching from a bull to a bear, there won't be significant or prolonged violations of that average. Frankly, I would like it if we never contacted the average at 1991.25 in the first place. So tomorrow, the Fed announcement day, should be pretty interesting. I have a significantly lowered price target, and if we drop first, rally, and hold this high, we have all we need for the beginnings of a really breathtaking collapse. And that's today's call.